Bitcoin has proven itself to be a wildly popular investment among risk-tolerant investors. However, it's not without its challenges. As you search for the next crypto to explode, it's important to know your risk tolerance and research thoroughly. Consider cryptocurrencies with innovative use cases and sustainable growth. Examples include unified meme coin staking and casino-focused block bets, $BBETS. These projects are positioned to benefit from future developments in the industry. 1. Increased regulation. As cryptocurrency popularity grows, government regulators are waking up to the fact that they need to do something about it. Some have banned it outright, while others are looking at how they can regulate it better. This institutionalization could drive prices up as large financial institutions begin to invest in it. It may also lead to greater transparency in the market. This is important because it would allow investors to see exactly what they are investing in. This would also help to alleviate some of the volatility that has plagued the crypto market. A major issue with cryptocurrencies is that they are not covered by the same consumer protection laws as traditional financial products. This was highlighted in the infamous ACDAO hack of 2016, which resulted in the loss of 3.6 million Ethereum, ETH. Institutionalization would change this and bring Bitcoin into the fold of regulated assets. This would allow consumers to file claims against unauthorized transactions and provide a level of security that is not currently available. In addition, regulation would allow for increased stability in the price of Bitcoin. It is currently very volatile, and this can make it difficult for businesses to use it as a medium of exchange. A more stable price would make it easier for businesses to plan their finances and invest in the currency. Another reason the price of Bitcoin may rise is due to new regulatory actions being implemented by the US government. A bill was recently introduced by Senators Gillibrand and Lummis that would create a legal definition of cryptocurrency and determine whose jurisdiction it falls under. This is important because different regulatory agencies have different classifications for cryptocurrencies, which can impact how they are treated by each. 2. Inflation. While cryptocurrencies are volatile, they're also not directly correlated with macroeconomic trends like inflation. That's because Bitcoin and other cryptocurrencies don't have the same deflationary properties as fiat currencies that are often driven by central bank policies. In fact, some experts believe that Bitcoin could even beat inflation in the long run. For example, unlike gold or other physical commodities that tend to hold their value against inflation, fiat currency inflation typically reduces the purchasing power of a given commodity over time. But Bitcoin's programmed scarcity gives it a unique resistance to inflation. This is because the supply of new Bitcoin is automatically reduced by about 50% every 4 years, thereby restricting supply and increasing the price of new coins. As a result, Bitcoin's value should rise despite rising consumer prices. This makes it an attractive investment for investors seeking to hedge against fiat currency inflation, especially compared to traditional stocks and bonds that are directly linked to inflation. Bitcoin's inverse relationship to inflation is why it has become so popular among investors. However, some experts argue that the cryptocurrency's volatility means it can still experience a crash similar to what happened in 2021 and early 2022. Investors were anticipating a Federal Reserve rate increase and reduced liquidity in the market, which led to a sell-off of risky assets like high-growth stocks and cryptocurrencies. But Bitcoin's low volatility allowed it to recover much quicker than stocks and other traditional investments, bolstering its reputation as a long-term store of value. As a result, some analysts expect Bitcoin's price to rise further in the coming months. But others are cautioning that the cryptocurrency isn't ready for mass adoption and is vulnerable to a sudden downturn. 3. Economic growth. The economic growth rate influences the value of Bitcoin and other digital assets. High GDP means more people are earning income and spending money on goods and services. This could lead to more investment in Bitcoin and other cryptocurrencies, driving up the prices. The recent economic recovery has also made more people aware of cryptocurrencies and their potential to grow in value. This has increased demand for Bitcoin from retail investors and institutions, which may push the price even higher. As the global economy continues to grow, more and more people will seek alternatives to traditional financial instruments like stocks, bonds, and fiat currencies. Bitcoin's deflationary properties and decentralized structure make it an attractive alternative. In addition, it can help protect wealth against government intervention and traditional market volatility. Bitcoin's underlying blockchain technology is secure and private, which makes it resistant to inflation. In fact, Bitcoin is often used as an inflation hedge in countries with high inflation rates such as Turkey and Nigeria. Furthermore, Bitcoin's hard cap of 21 million units ensures that the cryptocurrency won't be devalued by overproduction or counterfeiting. In the short term, Bitcoin's price is highly dependent on news specifically about the cryptocurrency and its broader crypto market. For example, any announcements about increased adoption or technological advancements can propel the price. Conversely, negative news can quickly drive down the price. Investors' emotions and euphoria can influence the price as well. For example, positive media coverage or social media posts from well-known people can boost the price of a coin. However, the long-term price trend of Bitcoin is driven by fundamentals, not emotion. This is why it's important to understand the key factors that could affect its price in the future. 4. Decentralization. One of the key features that drew early Bitcoin enthusiasts to the cryptocurrency was its decentralized network. The Bitcoin network is managed through a distributed ledger technology known as blockchain, which enables the Bitcoin digital coin to operate without the supervision of a central authority. This is what gives the currency its autonomy and censorship resistance. In a decentralized system, transactions are verified by thousands of computers throughout the world that process and record each transaction. These computers are incentivized to verify and add transactions to the blockchain by a reward program that pays them in Bitcoins. This makes the Bitcoin network extremely resilient and resistant to attack. However, the rate of decentralization is causing some concern amongst Bitcoin purists. They fear that the rate of decentralization may eventually erode the long-term viability of the cryptocurrency. As the Bitcoin ecosystem has matured, mining operations have consolidated into large groups of miners that collectively control significant portions of the network's mining power. This has raised concerns about a potential 51% attack, in which a single entity or colluding group could gain enough control to double spend Bitcoins or prevent certain transactions from being recorded on the blockchain. This would threaten the integrity and security of the Bitcoin network and undermine its censorship-resistant properties. Another issue is that as the Bitcoin network grows more centralized, it can become harder for minority stakeholders to get their views represented. This can lead to compromise solutions that may not be as efficient as they might have been if the majority of stakeholders were in agreement on them. Additionally, a concentrated mining network can face regulatory capture from government agencies or other entities that might try to impose their own rules on the Bitcoin ecosystem, further undermining its censorship-resistant properties. #5. Security. With a history of wild price swings, scandals, and missteps, it's hard to know what Bitcoin's future holds. Despite its many problems, the cryptocurrency is likely to remain popular with a group of risk-tolerant investors and continue to be developed by its core developers to address issues such as scalability and security. One potential catalyst that could propel Bitcoin's prices is the idea that it could become a strategic reserve currency. While this may be a long shot, the idea has gained some traction with the Trump administration, and could help to push Bitcoin's price higher. Another possible factor is the fact that criminals were early adopters of blockchain technology and have been using cryptocurrencies for a range of illicit purposes. The speed, pseudonymity, and largely unregulated nature of these currencies make them useful for a number of illegal activities, including terrorism, theft, money laundering, and darknet markets. The recent conviction of Ross Ulbricht, better known as Dread Pirate Roberts, for running the Ross Ulbricht darknet market illustrates just how prevalent these activities have been. Finally, the fact that cryptocurrencies are not subject to government controls makes them attractive to individuals and businesses looking to avoid regulations or restrictions. The lack of regulation has also allowed him to bypass financial institutions, reducing the cost and time to complete a transaction. Furthermore, the underlying blockchain technology behind cryptocurrencies is highly secure and resilient, making it less susceptible to cyber attacks than traditional banking systems. These factors have combined to create a unique and disruptive market that is likely to attract a growing group of investors in 2025.